Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, the bulls have ended the week on a high. We've got a record closing high for all the major indices. The Nifty, Sensex, mid and small cap indices, all of them have notched a closing high today. The Nifty in fact hit a fresh high of 23,490, but couldn't really manage to conquer that crucial 23,500 mark. Nevertheless, it has been a record closing, and for the week, although we haven't really managed to rake in big gains, but the Nifty has ended high by about 0.7% for the entire week. The broader market outperformance continued today as well. That has been the case for the better part of the week. So the mid and small cap indices gained in excess of 1% today, vis-a-vis the 0.3% kind of gains on the benchmark indices. The Sensex as well, did not really manage to close above that 77,000 mark, but nevertheless it was a closing high there as well. Advanced decline ratio strong, 3:2 on the NSE. If you look at the India VIX volatility gauge, that has cooled off further by 6%. So that volatility index has dropped below the level of 13 as well. Among the sectoral movers, you had Realty, autos, metals. These were leading from the front. What didn't do well today was the IT pack that was gaining traction yesterday. Today came under a fair bit of profit booking, and media once again, continues to lose. Among the individual movers on the Nifty, you had the likes of Eicher Motors, M&M, which by the way has hit a fresh 52-week high today, and pipped Tata Motors as the second most valuable auto company. Adani Ports, Titan, SBI Life, Cipla were among the other movers. In terms of losers, the top three losers were from the IT pack on the Nifty. So TCS, Tech Mahindra, Wipro. In fact, even HCL Tech was among the top losers. Other ones, UPL, Kotak Bank, SBI, these were some of the other losers. Broader markets saw a fair bit of traction, as I was mentioning at the start of the show. The defense pack, which was hammered out of shape on the 4th of June, has managed to stage a very good comeback, and today most of these defense names were doing well, and so were the shipbuilding stocks like Mazagon Dock and GRSE, that was by the way among the top gainers on Nifty 500 yesterday, extended its stellar gains today as well. On the other side, on the losing side, on the Nifty 500, you had stocks like Usha Martin, Zensar Tech, Redington, as well as Avanti Feeds. Paper stocks also did fairly well today. So JK Paper, that was another stock that was among the gainers on the Nifty 500 today. But to understand the texture of the market and where do we go from here and what kind of levels one should be watching out for next week, I am joined by Nilesh Jain of Centrum Broking. Nilesh, great to have you on the show. First of all, of course, we've hit fresh highs. We've come very close to that 23,500 level, but the moves haven't really been very big, right? We've been fairly range bound in that 150-200 point, bracket on the Nifty. So, would you expect trade to be as range bound as it was this week? And on the Nifty Bank Index, that has been underperforming, right? But 50,000, we've managed to shut shop just about at those levels, 50,000 levels. But would you say that a decisive close above 50,100 or something is needed to say that, the momentum is back on the Nifty Bank?
Very good afternoon, Nandita. So if you look at today's development, so in last 4 consecutive sessions, Nifty was constantly facing resistance at 23,400 kind of levels and was unable to clear that important mark. But now today's close on the weekly basis, I think it's a good close. And since we have a truncated week in the coming week, so I think Nifty is likely to inch towards 23,550 to 23,600 kind of mark. We have also witnessed some positive development on derivative front as well. The call writers have shifted their position on the higher side, and the put writers also shifting their base constantly on the upside. So looking at the overall development, I think the new range for the Nifty looks like 23,400 to 23,600 for the coming week. And similarly in the Bank Nifty, as you have rightly pointed out, it has managed to close just near about to 50,000 mark, but we still need a decisive close above 50,000, 50,100 kind of level. If you look at in this entire week, Bank Nifty has been the laggard and it has underperformed compared to the Nifty index, and that has been the major pain point for the market. So looking at today's close, I think there could be possibility of a short covering the Bank Nifty in the coming week, and the upside may open up for 50,300 to 50,500 on immediate basis. And lastly, if you look at the volatility index, India VIX, if you look at in last 6-7 consecutive sessions now, it has constantly witnessed a lower top and lower top formation, and currently it is near its 2 months lowish level, and that is certainly giving more confidence to the bulls. And if further drop from here will definitely help the index to pull further higher side.
All right, expect higher highs on the index, and of course a decisive close above 50,100 is needed on the Nifty Bank Index to say with confidence that the momentum is back for the Nifty Bank Index. But what about the IT pack? Yesterday we saw a fair bit of traction. In fact, if you look at how the stocks have performed in the last 1 week or 10 days since the 4th of June, some of them have made a very good comeback, right? The likes of TCS, Infosys, HCL Tech Mahindra, all of them have risen somewhere around 10%, 7% or the likes, since 4th of June. Here on, would you say that, any dip should be used or utilized to get into these large cap IT names, especially the likes of TCS and Infosys?
So Nandita, first we need to understand the development in the Nifty IT index as a whole. So earlier in the previous week, we saw it breach its 200-day exponential moving average, and at the same time the 50 DMA that is also placed at 33,800 levels. And currently Nifty IT index is trading at 34,600. So from current level, it is trading well above short-term and long-term moving averages, and the structure is indicating a sort of consolidation on a immediate basis. But yes, I think it's a good time to accumulate the large cap IT names that you have pointed out: HCL Tech, TCS, Infosys. In fact, all these three stocks are looking positive. But the confidence is certainly coming in the mid cap and small cap IT names. So watch out for that particular space. Counters like Birlasoft, LTIM, or maybe LTTS. These are the few names that are giving more confidence within this space. But yes, if somebody is looking from a position point of view, I think at current level, IT index as a whole looks positive from a better risk and reward point of view, and gradually we might see Nifty IT index to inch towards 36,000 or maybe beyond that.
Talk about the the auto pack as well. M&M in fact has hit a fresh 52-week high today in the last 1 month. I was just looking at the chart; it's up somewhere around 27%. Where do you expect the stock to hit the resistance level going forward? 2,946, that's the 52-week high that it made today. Would you say that there are higher highs on the charts possible, or would you say that it is fast approaching that overbought zone on the charts? Where are the charts poised now when it comes to an M&M?
So Nandita, Nifty Auto Index is in a secular uptrend kind of a structure, and it is constantly forming a high top and high bottom formation as well. So today it has hit another record high of 25,720 levels. So within this space, we are liking counters like Eicher Motor, Mahindra & Mahindra, and also Maruti as well. So as far as M&M is concerned, today it has hit a fresh record high. It is likely to test the levels of 3,100 in the June series itself, and that's the level that we are expecting on this particular counter. So 2850 should be the stop loss for the long position. Although it may look slightly overbought at current level, but it still has a potential to test 3,100 or 3,200 kind of level on the upside. Apart from that, within two-wheeler space, we are also liking counters like Bajaj Auto and TVS Motor as well. So watch out for overall as a Nifty Auto Index pack as a whole looks positive. If at all we see any meaningful correction in any of these names, that can be used as a buying opportunity.
All right, auto index in a secular uptrend. But what about FMCG? Last week, of course, when we saw that big crash, FMCG stocks came to the rescue. But this week, I'm just looking at the list of losers for the week on the Nifty. That list is dominated by names like HUL, ITC and Tata Consumer. Here on, what do you do with some of these large cap FMCG names? Do you think one should look at buying into these at these levels, or how would you approach these FMCG names, because they've also seen quite a lot of underperformance? It's just over the last 2 weeks that we've started seeing buying interest in some of these names.
So Nandita, we have seen previously that during uncertain time, the focus certainly shift toward defensive, and now since the index itself is looking strong, so we may not see that kind of attraction in the defensive sectors like FMCG, IT and Pharma as of now. But yes, if at all we see any further dip from here, that can give a good risk and reward in the Nifty FMCG counters like HUL, Tata Consumer, or maybe ITC. So yes, if somebody is looking from a position point of view, and looking for to make a good portfolio, I think this is a good time to add counters like HUL, ITC, and Tata Consumer. So within this space, precisely we are liking a double. The structure looks strong for 650, 670 kind of levels on the upside. Stop loss can be placed below 580. And apart from that, Tata Consumer could be another stock that can be bought on declines towards 1090 or maybe 1080. Keep a stop loss below 1060 and upside may exchange further towards 1140 to 1160. So you have to pick and choose a few FMCG names, but as of now, I think the consolidation may continue for some more time.
All right, but what does one do with stocks like GRSE, Garden Reach Shipbuilders? Yesterday it was among the top Nifty 500 gainers. Today as well, double-digit gains. Would you say that the risk reward is looking unattractive at these levels after the kind of run-up they have had?
So that has been the case for all the defensive, defense space as a whole. So even if you look at counters like Mazagon Dock, GRST, Cochin Shipyard, in fact, all these counters have given a good run-up today. So after such kind of a sharp run-up, the risk and reward is certainly not favorable to go with any aggressive long position. But yes, within this space, defense space that we are talking about, so we are liking HAL, that's Hindustan Aeronautics Limited. So that particular counter still looks positive for 5400, 5500 kind of a target on the upside. Stop loss can be placed below 5000. And apart from that, another stock that is given a good breakout today, that is Cochin Shipyard. So yes, Cochin Shipyard can be added at current level, and if at all we see any dip towards 2000, that can also be used as a buying opportunity. So better advice would be to buy in a staggered manner, and we may see a gradual up move to continue from here as well.
Another breakout stock I want to talk about is Bharat Electronics. The stock had declined 20% on the 4th of June, but since then it has recovered all of those losses. It is up 20%. It has gained in all of the 8 sessions after the 4th of June, and of course there are expectations that it could enter Nifty in the August rebalancing as well. So what is the next resistance that you will be watching out for a stock like BEL?
Right, Nandita. So in this week itself, it is up close to 10%, and it has witnessed a good recovery. I would say a good rebound in this week as well. So it is shy away from hitting all-time highs. The structure still looks strong. Even if you look at on derivative front, close to 4% OI addition can be seen today as well. So good long build-up is happening. I think the stock is likely to move towards 325, 330 kind of levels as far as June series is concerned. So good level to enter at current level as well. Keep a stop loss below 295, and upside seems to be open for 325, 330.
As a trading play, how is the cement pack looking to you? Because cement pack has seen robust buying interest over the last few sessions. There are reports, in fact, there are reports saying that they have hiked prices pan India, and of course now Ambuja Cement has made an acquisition in the south. Brokerages have given a thumbs up. The stock was up today as well. What is the next target you'll be watching out for here, and is it a good trading play now?
Yes, so Nandita, in this week we have seen good attraction in the cement space as well. Ambuja Cement, Ultratech Cement, both these stocks were up somewhere around 7 to 9%. So this momentum, I think, may going to continue from here as well. So within this space, couple of stocks that we are liking, preferred bet would be Ambuja Cement. So if at all we see any dip towards 660 or maybe 650, that can still be used as a buying opportunity. Keep a stop loss below 600. This particular counter is trading well above its short-term and long-term moving averages, and today it has hit a fresh record high as well. So structure-wise, this particular counter looks strong. Apart from that, Ultratech Cement, I think at current level it may not be advisable to buy. Better wait for some dip towards 11,000 or maybe 10,800. That can be a good buying opportunity. Keep a stop loss below 10,600. Our position target in Ultratech Cement is placed somewhere around 11,600 to 11,800. And lastly, another stock is JK Cement. So this particular counter is also looking positive for 4,500, 4,600 kind of level on the upside, and stop loss can be placed below 4,150.
All right, that's the view on the cement pack. But another stock that has been taking off is GMR Airports, right? I mean, and brokerages are fairly positive on this stock. Today we had news flow that Chris Wood has added this particular stock to the India long only portfolio with a 4% weightage, and it has added the stock by reducing exposure to names like ICICI Bank and HDFC Bank. Here on GMR Airports, what would you be watching out for in terms of levels? How are the charts looking, and what kind of levels on the higher side would you be watching out for?
So Mehta, we are very much bullish on this particular counter. Technically, it has given a good 6 months rectangle formation breakout today, and even if you look at the volume participation, that was quite above average. So given this kind of breakout, I think the target on the upside, the conservative target on the upside comes around 100 to 105, and aggressive target could be 125 to 130. So major structure looks positive. At current level, the risk and reward is also looking favorable. One can keep a stop loss below 88, and immediate momentum can be played for the upside target of 98 to 100.
Anything that you like in the metals pack, Nilesh? The likes of Vedanta, Tata Steel, anything catching your attention?
So Vedanta is currently undergoing some amount of consolidation, but yes, once this consolidation gets over, I think we might see another uptick towards 460 to 480. But within this space, one stock that is looking slightly on the positive side, that is JSPL, Zensar Power. So this particular counter, in fact, if you look at the chart from past 1.5 years, this has been one of the outperformers within the Nifty metal space. So yes, it looks strong. And on the upside, I think it is likely to test the new all-time high of 1100 plus. So at current level, if somebody is looking and making a fresh long positions, keep a stop loss below 1025, and the upside target could be 1080 to 1100.
All right, 1080 to 1100, that's the upside target for that stock. But Vodafone Idea, I want to bring your attention to this stock as well. I think we've spoken about this stock earlier as well, but there has been a spate of fundraise, and of course recently it has got the approval to raise up to 2500 crore rupees through a pref issue as well. After the follow-on issue, what is your outlook on the stock, or what has your strategy been on this particular stock with respect to trading or investing? How should one approach this?
So Nandita, technically again we are very much bullish on Idea as well, given the kind of development that we have seen recently. First of all, technically if you look at it, is trading well above 200-day exponential moving average. That has acted as a good support historically, and that is currently placed at 13 rupees, and followed by 50 DMI that is placed at 14 rupees. So these are the two important support zones for the Idea. And at current level, or if at all we see any decline, that can still be used as a buying opportunity. But one should keep in mind this is a positional bet, and positionally we might see stock to reach test the levels of 20 or maybe beyond that. But one should have a patience. This stock may undergo some volatility on the back of news flow that we will see. So yes, the immediate hurdle for this stock is at 18. The moment it takes out 18 level, the next target could be 20 to 22.
22 to 23, crucial level to watch out for on Vodafone Idea. The last stock on my list really is Prestige Estates. We've seen the Realty pack, raking in very tall gains, right? Every other day we see the Realty pack emerge as the top sectoral mover. But today Prestige Estates has hit a fresh high. You have a buy rating from CLSA. Target price has been in excess of 2300. Would you call it the next breakout stock within the realty space?
So Nandita, this stock is trading in uncharted territory. It is constantly making new all-time highs on a day-to-day basis. So at current level, it is in the overbought territory. So risk and reward is certainly not favorable at current level. But this stock still has the potential to test 2000 or maybe 2100 kind of levels on the upside. So if somebody is already holding the long position, can stay put, keeping the trailing stop loss below 1800, and upside may extend further towards 2000 to 2100. But within this space, the stock that we are liking is Godrej Properties. So this particular stock, I think it has given a good breakout from a rounding bottom formation, and the target for the same comes around 3200 to 3300 from short to medium term point of view. One can keep a stop loss below 2850. Another stock is DLF. So this particular counter has also given a good falling channel kind of a breakout on daily time frame chart. it has a good potential to test 900 to 925 on the upside. One can keep a stop loss below 855.
All right, that's the view on the Realty pack. But Nilesh, going forward over the next couple of weeks, of course, next week is a truncated one. What is it that you're keeping on your radar for the next couple of weeks?
Right, Anta. So we are very much bullish on the overall market. The breadth is looking very strong. The broader markets are doing very good. So given this kind of scenarios where we are constantly witnessing a positive development on derivative front as well. So it is, the market looks slightly, I would say, optimistic as well. But at current level, the comfort is not coming to go long in the index. Whereas the stock specific action, we expect it to continue. So within sectoral point of view, I would say the Nifty auto index, we have already discussed about that. So that sector, we are still bullish. Within this space, the stock that we are liking is TVS Motor or even Maruti or Tata Motors. So these are the few names that we are going long. And apart from that, within insurance space, LIC is our preferred bet. Apart from that, HDFC Life is another stock that we are liking. So we are focusing on sector-specific move and stock-specific action. Another sector that we have already discussed about the Nifty Realty space. So within this space, the counter side, Godrej Properties, DLF. So these are the stocks that we are eyeing on, and given the kind of a drop that we saw in the India weeks, that is again giving us the confidence that market from here are likely to be in the comfort zone for the bulls. Lastly, the sector that has underperformed the most is the banking. So banking, we expect it to patch up the rally. And within the banking space, specifically the PSU banking space, we are more positive on. So State Bank of India, we are bullish. Bank of India and Canara Bank are the other stocks to watch out for. And within private sector banking space, HDFC Bank, Axis Bank, and ICICI Bank, these are our preferred bet. So we are playing, stock specific and sector specific rather than focusing on index.
All right, be sector specific and stock specific rather than focusing on the index. That's the view coming in from Nilesh. With that, Nilesh, thanks a lot for taking out time and joining in this afternoon. Of course, it's a long weekend. Wish you a happy one and a restful one. Of course, we will touch base sometime soon, but great to chat with you as always.
Thank you, Nandita.
Well, with that, we've come to the end of this edition of Closing Bell. We have ended the week on a high, and experts say that, going forward, we could see higher highs on the chart as well. And perhaps next week, we will manage to conquer that 23,500 mark as well. On that note, we are completely timed out. Thanks a lot for tuning in this afternoon. Have a restful long weekend and come back and join us on Tuesday morning on opening bell at 9 a.m. But till then, stay tuned to Moneycontrol for all your other news and updates.